following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. Of course, we are your bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, some analysis, some education, some what's trading, a little bit of a trip through the dark side, and we wrap it all up with what's coming up and perhaps some input from you, the listener. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding Options Insider Radio Network. If you haven't had a chance, check out the Options News Rundown and, of course, our newest program, Wide World of Options. You get to see the broad view that the Options Industry Council brings to the table when they're looking at the options market. Check it out, Wide World of Options, available at theoptionsinsider.com, iTunes, Stitcher, Aha Mobile, wherever finer podcasts are purveyed. And now, joining me on the old program, my usual cast of characters, starting off with the man holding down the hot seat over there at Options Express. You know him, you love him as the Viceroy. He is none other than Alex Jacobson. Alex, welcome to the program, sir.
Hey, Mark. I'm no longer turning on my terminal until 2:50 every day and just watching the last 10 minutes.
Yeah. Yeah, otherwise you get the wrong script for the rest of the day.
Yeah, it's been that way for 2 weeks now.
But what fun would it be if it was all one narrative all day long? It'd be too easy for guys like us, Alex.
Yeah, well, today was fun.
But of course, the market doesn't hold its breath for guys like us who need to create a compelling narrative for the day. It does what it wants and leaves us to kind of scratch our chins and say, Speaking of scratching your chins and saying, we're also joined by the man beaming in from the great town known as St. Charles, Illinois, Uncle Mike Tosaw from RCM Asset Management. Uncle Mike, welcome back to the show, sir.
Always excited to be here on a Monday.
All right, and we have a abbreviated panel today on the old Option Block program, but nonetheless, we are poised for some fun. So let's get to it and dive right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. And as Alex alluded to at the top of the show, was a wee bit of a whipsaw day out there on the old street. The market had a pretty broad range, S&P dropping down as low as 1609 and as high as about 1626, almost 1627, to close right around in the middle there at 1615 or so, which is up about 0.5%. On the old day, NASDAQ leading the charge, pulled along by some strong results out of Apple today and pulling the market along with it, up about nearly a full percentage point to 34, and the Dow, the laggard on the day, only up a mere 65 handles to 14,974, nearly 14,975 on the day. So flirting back with that all-important 15,000 level. Not able to close over it today. But as Alex said, a lot of interesting stuff going on. A bit of a whipsaw day, a little bit of up, a little bit of down. Perhaps we'll start in the lovely scenic land of St. Charles, if we can have our mobile Skype gods smile upon us and see what really caught the eye of Uncle Mike out there during the day. First off, how was the BBI today, Uncle Mike?
Oh, not too bad. I'll say this GLD calendar that I have going on is becoming quite the interesting calendar spread. I didn't pull the trigger on doing any adjustments today, but looking to make another adjustment to this calendar spread that we're looking to try to achieve theta. So I guess to answer your question, BBI was at normal levels.
Yeah, today was the kind of day where, as Andrew would probably say, you might want to do stuff. Just a good doing stuff kind of day. A lot of back and forth movement, a lot of opportunities to leg into stuff. Of course, we talked on our last show about just the levels gold was selling off to and the ridiculously, perhaps some might say overdone sell-off in gold. We saw quite the reversal of that today with gold popping quite a bit. GLD alone up nearly 2% on the day, or a little bit over 2 handles to 121, and just a lot of broad love for the metals today, in particular GLD. Of course, some of the names we talked about last week, the gold miners and others, also faring fairly well, given the broad love in the marketplace. Alex, I'm guessing a lot of the phone calls coming into OX today were gold and metals related.
Yeah, the thing that lit up the phones today clearly was the metals. A lot of energy talk too, and I guess the unrest in Egypt spiked oil prices a bit. But there were also a couple of hot names today. Obviously, we all came in this morning looking at Onyx up about 50%, and the biotechs had a little bit of a lift today. So Regeneron, a name that we hear about a lot here, was up about 5 handles today. But tell you what, it was also Tesla and Apple today, each one up double digits. So there was a little life in the phones today. It was funny. I would expect this week to be quiet because of July 4th holiday. And, you know, we opened strong, but there was a lot of equity talk on the phones today. Google was a name I heard coming up a lot today, too. So it was a pretty typical option day in that a lot of the conversations were the stuff that was up 6, 7, 8, 10, $12, and the underlyings that are probably too expensive to trade for a lot of people, but the ideal layup if you're trading options.
Yeah, Alex touched on it just now as well, Uncle Mike, but of course, you are famous for having your two-pronged approach here on the show. The GLD, the metals, and of course Apple being the other prong, a scaled-back prong of late, but still an interesting one. Of course, both of those holdings having a pretty strong day. Did today's up movement in Apple convince you that perhaps it is time to start writing those puts? I know you were hanging on the fence. You were waiting for the sell-off to end. Was today's, about 3% move to the upside enough to convince you that now is the time, or are you still keeping your powder dry?
Powder is still dry, but I will say this. The finger is on the trigger, and it has quite the itch, I must confess.
So what will it take to tempt you back into the dark side of writing some premium out in Apple there?
I want to see if it's for real tomorrow. If we rally a little bit on the open tomorrow, I will likely have some type of premium written, and also I want to see what type of premium's there tomorrow after the rally today. So I guess right now it's kind of like my thought is it's the will you still love me tomorrow analysis is what I'm looking for at this point.
You are probably the opposite of many of our premium selling listeners who when it rallies, they feel they've missed it, and yet you like to see that there's a little bit of legs there before you dive into the dark side and just start blasting out some premium left and right.
I do. I don't like to. I like to have a little bit of confirmation, and that's what's helped me stay solvent for 10 years.
That does help, when you're not blasting out things when things are dire, but you're kind of taking some time to keep your wits about you, so to speak. It tends to help in the long run. Of course, talking about when things are dire and keeping your wits about you, we touched on Blackberry at the end of the last show. They had earnings coming out the following morning after the show, or of course, by the time you listen to that episode, the news is already out. Blackberry just taking it on the chin last week. We discussed how the straddle was fairly pricey going into that. It was closed around 14.5 on the evening on Thursday going into the earnings. I believe that weekly straddle with 1 day to go was trading about $1.60. So they were pricing in a fairly substantial move. Turns out not all of straddles are created equal, and certainly that was not the case here in Blackberry, where the stock was just annihilated, closing down today even further, another 1.6% to close at $10.29. So that straddle, what turned out to be about a $3 winner if you bought it. Well, at least you didn't get all of that move, but you got a lot of that move on Friday, and with the rest of it coming today, and just an annihilating of this name. I think this represents, people had a lot of hopes pinned on those new handsets, the Z10 and the Q10. They were hoping Blackberry was going to get back to form, come out with some cool physical keyboard handsets, and really become competitive again in the high-end smartphone arena. Well, a lot of people, I think, were disappointed with that Z10 and that Q10, and apparently the results showing that, not exactly lighting up the tape at all, and there's still just aggressive levels of vol out here. We were looking at, I think earlier today, the stock for a little while actually broke the 10 handle, and those 10 puts were trading for a substantial, for about 62 vol right now in those puts. They're trading for about almost 60 cents at one point. So just a substantial amount of juice in here. A lot of people concerned that this latest push was too little too late for Blackberry, and they can't really turn it around in time. Did you get a lot of calls at all today, Alex? Did you hear any calls coming in on Blackberry? Did you see a lot of action in Blackberry? Perhaps the Idea Hub lighting up some interesting opportunities out there in Blackberry on Friday and today?
No, it was not a name that seemed to be coming in on calls or any of the search tools. The pre-earnings, it was on the search tools, but today I didn't really hear a lot relating to Blackberry.
Yeah, it's a shame because at this point it's hovering around that $10 price level, and it's pretty much anyone's guess whether this is their poise for any sort of turnaround down the road, or is the beginning of a long, slow, lingering decline down to the zero level, or until somewhere around that level where someone decides to gobble them up for a couple of bucks for patents or whatnot. Hopefully it's not the latter. A lot of people out there still having some love for Blackberry. I've never been a big Blackberry fan myself. I've always had the touchscreen smartphones, and I've never really missed the physical, I suppose. But a lot of people out there in the business community still holding the torch for the old Blackberry. So maybe there will be some gold at the end of the rainbow here for Blackberry. What it is right now, I really couldn't tell you. We didn't have a chance to touch on it last week. I just want to touch on it really briefly today because it was the big story in the futures mostly, but also in the options realm about a year and a half ago. So of course the MF Global story. They finally, after a lot of back and forth, the chairman of the CFTC, Gary Gensler, even recusing himself at one point because he used to work at Goldman with Corzine. They finally got around to charging good old John Corzine, who was, of course, the CEO of MF Global, presided over that just atrocious annihilation of that firm and all those customer funds. So it's nice to see that finally that's catching up with him. A lot of people for the past year and a half have been really building up a lot of evidence against him. There's been a lot of back and forth in the space, in the media, about what's going to happen with Corzine. Nice to see it finally, some of these chickens coming back to roost at his doorstep. You can't preside over something like that. Certainly not something where they dip into customer funds, which should be sacrosanct, and come away from it unscathed. You really should have that catch up to you. And a lot of people didn't like the perception that this guy could do this and get away scot-free. So it's nice to see that someone, somewhere, some agency is finally bringing that home to roost over there at Mr. Corzine. Of course, the charge is just announced. We'll see how that unfolds down the road. Perhaps some other agencies follow suit, and we'll see where that unfolds from here. But interesting, at least for a lot of people, to finally see some charges being laid at his doorstep. And last up here in the old trading block, I want to hit on it today because this, of course, is the 1st of July. And if you know the options biz, this is when the big numbers come out for the previous months, where we can see, kind of get a gauge for the health of the options industry overall. And it was a fairly banner month, as you might have guessed. June, traditionally not a high volume month to begin with. It's part of that whole sell in May and go away mantra. People not off on vacation, the starts of the holiday weekends, all these kind of things. Markets are light and thin usually throughout the month of May, so the options market tends to follow suit. usually pretty light and thin. Of course, what we've seen over the past few weeks, massive moves in the S&P, massive moves in the Dow. That's led to a lot of corresponding action in the options market. The Fed, of course, bringing in a lot of volume last couple of weeks as they were getting into that, gearing up for that big announcement. So no surprise that the numbers for June were up substantially from last year. One of the few lone bright spots of this year from a volume perspective. The OIC announced this morning that it was volume today volume for June, 361 million contracts, which is up about nearly 11%, 10.86% from this period last year where they only traded 325 million contracts. And for the first half of the year now, we've finished all the way through June, obviously now. So the first half of 2013, we're at 2.1 billion contracts. That's a 1.35% increase from this point last year where we were a little over 2 billion. So despite some earlier months of the year being somewhat lackluster, this month, like June and a few others, and some of the massive swings we've seen in the S&P lately, sorry about that, and some of the massive swings we've seen in the S&P lately really contributing to a nice boost year to date in volume. I know earlier in the year, beginning of the year particularly, a lot of people were concerned about the plight of retail, if they would come back to the market, whether minis would foster that influx back into the marketplace. It seems like these numbers are starting to bear that out. Equity options also up on the year, up about nearly 10% to about 300 million contracts on the month. So good stuff all around. Alex or Mike, anything you want to chip in here on the old volume numbers? Alex, that must kind of appeal to you, someone who's been around the industry for a while, been at SIBO, was at ISE, now over at OX. It's kind of got to be at least a nice thing to see that for the first half of the year, things are picking up a little bit.
Yeah, the tone is better, and the retail options market has been pronounced dead, I would say 30 times in my career, and that's never been the case. The well-informed investor has always need a path to the options door. When I left the SIBO in 2000, we were doing $3 million a day, and fees were different. Electronic trading was just beginning. Multiple lists had finally sort of got a toehold. So, the fact that we're doing, 15 million a day now, 5 times the volume, we're doing it with much lower transactions costs. I always tell the story that when I started at Merrill Lynch in 1980, it was $14 a contract commissions. And people look at me and they go, no, I mean $14 a contract. A 10 lot was $140. And then the big competition was a company called Charles Schwab, and they were $29.95 and $250 a contract, a price at which most people still gag and drop to the floor. And today people are doing business, around $1, maybe a little more than $1, and that's what's fostered the growth. The great competition, the great addition of exchanges. We talk a lot about markets being a little thin here, but it's been a great evolution. And I think now we're seeing a big evolution in the futures options business. And hopefully we'll see the same, seeing it get traction and liquidity. And it's been really cool to watch these markets evolve. It's the one thing I can say is kind of the old guy on the show is I've seen them come from, being pronounced dead to days when we do 27 and 28 million. And 27 and 28 million contracts was a pipe dream prior to recent volume.
Yeah, and I'll even add to that. Alex is right. The retail investor in the option space is definitely growing. I couldn't even imagine doing what I do with client money on the retail side of the equation 10 years ago. I remember when I broke into the business, my first job was with MetLife, and for the most part, I was a life insurance guy, but the guys on the investment side of it, I just remember them showing me an annuity or a mutual fund or whatever the case may be, and I would say, well, why not just buy SPY? You can do it at Options Express for this amount of money. What's the advantage of this? And just talking about that with them. And for the most part, the type of clientele I deal with in terms of net worth is very similar that I did from day one of my career. But with that in mind, this is something that wasn't even talked about back in the days on the retail management side of things. And we've come a long way, baby.
Yeah, what you do really, I mean, it was possible, certainly, but it was much more difficult a decade ago. The technology wasn't there. Certainly the fee structure wasn't there to really do a lot of active retail trading in and out. It was laborious. You had to pick up a phone to do a lot of your orders. 10 years ago, 2003, it was still pre-linkage at that point, so you had trade-throughs. You had multiple exchange silos all over the place. The options market was a very difficult, laborious, and fragmented place to really try to get your trading done. So a decade later, things have really, really evolved. Alex hit on the daily numbers. I just realized I forgot to mention those for June. June, the average daily volume total was a little over 18 million contracts a day, 18.059 to be precise. And for equity options, that's, of course, total options, including index options and everything like that. For equity options, the average daily volume was a little bit less, about 16.3 million. So nearly 2 million contracts a day coming in from the index products. So a good note there for the options biz, where, like Alex was saying, that, beginning of the year, a lot of people weren't sure what was going to go on with retail. A little bit of some movement from Uncle Ben and a few other things contributing to the overall till. And now, this point in the year, halfway through exactly, and things are up a little bit. So I don't think anyone would have really predicted that going into January. So nice to see that there's been a little bit of a high point, a little bit of a turnaround in the old options biz. Certainly good for us here on this show. Certainly good for all of you listeners out there, because the more volume, the more stuff's changing hands, the better it is for you guys out there as well. So we'll end the trading block on a high note and then put on our fedoras, because it's time to dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the old Odd Block. If you'd like to play along and play the home game, then surf on over to theoptionsinsider.com. You can read all of the detail on these alerts and many more over there on the old website. But for now, since you're listening to the show, we'll start it off with Sina Corp, ticker symbol SINA. They closed today at $55.68, up pretty much unched on the day. As the name implies, this is a company that has something to do with China. They are an online media company serving the Chinese community. So an interesting name right there, a name that usually does, about 13,000 contracts a day. So that's fairly active considering what we've seen in the odd block in the past. A lot of our names do 200, 500 contracts a day. So 13,000, fairly sizable. Doing a lot more than that, nearly 3x today, 35,000 contracts on the day today. The bulk of that really coming, 30,000 contracts of that coming in one massive call roll to a call spread. We saw the SEP 70s. Someone came in and sold 10,000 of those for 74 cents. These are substantially out of the money calls. The stock closing about a little over $55 today. So this thing's got to rally substantially for these calls to break even. This trader selling out of that SEP 70 position, deciding, now in September, maybe not exactly enough of a time frame for him. Wants to give himself a little bit more time. He rolled them out to Ds, where instead of just buying the D70s, he ended up buying the D70-80 call spread, reducing his net outlay, only paying about $1.29 for those calls outright. I'm sorry. Only paying about $1.29 for that call spread outright. That makes out for a net debit of about 55 cents on the trade. So what it looks like is a guy, pretty substantial bull here in Sina, very out of the money. We've said what we have to say about buying out of the money calls on the odd block a number of times, so I won't get into that again. But it is interesting to watch this guy does not only give himself some more time, but take some of that premium off the table by legging into not just upside calls, but an upside vertical call spread. So maybe he's learning that there's a little bit more to this options game than just repeatedly buying upside calls. Of course, there are 13,000, almost 14,000 calls open on that strike. So this is all, or the bulk of it is this guy. Then he's got another about 3,500 or so to go. Maybe he's keeping his powder dry on those. But interesting stuff here in good old Sina. Maybe we'll check back around the September time frame to see if this guy was right by rolling his stuff out to December. Next up, we have Tempurpedic International. They make all those nice Tempurpedic beds that you guys see in all the infomercials. Their ticker symbol TPX. They closed today at $44.81, up about 2% or about 91 cents on the day today. And what we saw was, well, first off, this is a name that does about 4,000 contracts a day. Fairly active for a mattress manufacturer, doing about 23,000 contracts today. So they were lighting up the tape as well. Again, the bulk of that coming in really one sizable trade. We saw someone coming in and selling the 43, 45, 47 call fly in July and doing it 5,000 by 10,000 by 5,000 for a total of 20,000 contracts. So pretty much almost all of that day's volume in one big spread. The customer came in, he bought the July 45s. Yes, the customer bought the July 45s 10,000 times, sold the July 43s and 47s 5,000 times each, legging into this fly. It's a pretty interesting move. Obviously, this guy looking for a substantial run in Tempurpedic over the coming weeks. Looking at a chart here on good old TPX, this thing has had a bit of a range, trading down to $40 about a couple of weeks ago, and on the upside, hitting nearly $50 back in March. This guy doesn't have that much of a time frame. He's only got a few weeks, so he's probably betting on this thing retracing to the downside and maybe getting down to that 40 handle again. Doesn't matter where it goes, as long as it gets away from that 45 handle where he's long a ton. Alex, I'm guessing TPX doesn't really light up your tape over there at OX very much. What about you, Mike? This seems like a relatively stable name. Wouldn't be something that would scare off the grandmothers in your portfolio. They like some bedding material. Maybe TPX, an attractive name for you. Ever taken a look at it?
Not as a stock, but just a couple things. We actually had a Tempurpedic bed, and it didn't work out for us, but they gave us all of our money back, and so no complaints in terms of the customer service. Must say some good things about that. But yeah, don't really have a lot in it. So I think just what that guy's trying to do is just, like you said, I like the butterfly. I like that trade setup if you're trying to take a spec like that. But he must be pretty confident in what he's doing. Let's just say, to put that kind of size on the table.
I have heard, speaking of the product really quickly, I've heard a lot of people complain that it gets really hot when you're sleeping on one of those foam things. Was that your experience?
No, not so much. It just didn't work out. It wasn't quite the exact thing. So it didn't really get that hot. It just wasn't the right fit for us.
All right. Speaking of the right fit, I think we'll have one more to fit in here on the old odd block. You readers can read the rest of them on the old website. We're going to finish it off with an interesting newcomer to the old odd block. This is Air Products and Chemicals Inc., ticker symbol APD. They closed today at $93.51, up about 2% or about $2 on the old day. And this is a name that does about 900 contracts a day, but they turned that on its head today, doing 20x or over 18,000 contracts here in APD. This is, as you might expect, they have a portfolio of chemical products and processes that they produce here at APD. And what we saw lighten up the old tape was just some massive interest in the July 85, July 90, and July 95 puts, with a lot of people just lighting up the tape buying these puts over and over again. And what's interesting is that the buys of the 85s, the 90s, and the 95s, pretty much all of them came in pretty small lots. It wasn't massive blocks of 5,000 or 2,000 or 3,000 or 10,000. It was 10 lots and 20 lots, maybe some 100 lots thrown in there, but not the sizable stuff you usually see an institutional player do. So if this was an institutional player looking to hedge a massive amount of stock here on the 90 and 95 level, and perhaps even the 85 level, they're kind of uncertain. They don't know which strike they want. But also, it's unusual to see that kind of fragmented size for an institutional player. So when I see this, my alarm bells start going off that, hey, this is a newsletter probably, or some other type of recommendation. Someone came out and said, hey, buy some near-term downside here in APD. Things going to gap down, and maybe they recommended the July 90 puts. Some people started legging into the 85s and the 95s too to get a little bit creative. The bulk of them, 9,000 going up on that 90 strike. We used to see this going up in the S and Intel all the time. Whenever someone recommend any particular trade, people would see it, and they would get that information throughout the day, of course. They wouldn't just get the newsletter in the morning. So they would keep coming in and bidding up that strike and bidding up the vol on that strike and bidding up the vol on that strike all day long, regardless of what the volatility level, regardless of if they were the last lemming off the dam. They didn't care. They wanted to get that trade in at any price. And looks like we're seeing something like that today as well. Again, only about 1,500 contracts open on that strike, and all this paper driving up the vol about 10 percentage points to nearly 30% on the day. So this is one we'll keep an eye on. Maybe we'll make a note right here to keep an eye on APD, because this is a lot of near-term paper here that's flocking in. So if it's a stockholder, he's looking at some very near-term protection. If these are outright specs, these guys are flocking in as well. Always good to check back in and see how this recommendation paper does. But now we're going to keep on rolling with the show and roll right on into the Viceroy block, commonly referred to as the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, and welcome to the Xpress Block. This is, of course, the portion of the show where Alex takes the reins and my voice gets to take a little bit of a rest, which it could quite frankly use today. So, Alex, what's cooking behind the curtain over there in the land known collectively as OX?
So you won't get a long rest because today was, kind of already recapped the day. Today was metals and handful of names, Tesla and Apple. But I do want to make a comment, use a little bit of this time, because last couple of shows we've talked a lot about margin rates and who margin is intended to protect. And every time we talk about that, I've made a couple comments about expect margin rates to go up on the metals. I think we talked about that a couple shows ago, and margin rates are changing on the VIX. And I always get emails that say, are you clairvoyant? And let's sort of clarify that sometimes it's pretty easy to determine that margin rates are going to change. So I just want to sort of lay out a caution to everybody that in these markets where we are getting big swings, $50 on gold since last Thursday, if you're trading on the equity side with minimum margin or what we call minimum SMA, or you're trading on the futures side with as little money as possible, you're nuts. So please have some extra powder dry. Please have some extra margin money. And this isn't an appeal just to OX and Schwab customers. I'm going to be very ecumenical today. But please be aware of the fact that margin won't protect you. Margin is designed to create enough of a cushion from the time the trade is made till the time the trade settles to protect the brokerage house from an unsecured debit. So please don't expect the margin department to save your life if you're on the wrong side of something. Leave some extra powder dry. Have some extra cash in the account. Maybe instead of trading 10, trade 6 or trade 5. but it's not that I'm clairvoyant. It's just that you need to have a clear understanding of what margin does. And I get both the clairvoyant and the angry emails that want to know if I'm manipulating margin, and I'm not. I've seen this before. We've all seen it before. Just be aware that when things start to move, the treasury, the 10-year treasury, which is normally a 4, 5, 6 vol, 10 vol might be extreme, has had days, clusters of days where it's traded a 20 and 30 realized vol, and you're going to get margin changes when that occurs. So please be prepared for that. And many years ago, started my career at Merrill Lynch, and we had a little sign on the wall that said minimum margin is a sign of minimum intelligence. So please take that to heart.
You're right, Alex. This is, of course, the perfect storm, if you will, for an increase in margin across the board. We're in an environment where rates are poised to increase in the near term, perhaps. We also are in a market environment where the underlying, the S&P, is moving 0.5%, if not 1 or 2% a day. Those two things combined are a recipe for an increase in margin. So keep that in mind if you are playing a little bit close to the vest, if you are an aggressive premium seller, if you like to do, let's say, ratios and leave a lot open on the short end of those ratios, you're going to be tying up a little bit more money in those types of trades these days. So bear that in mind when you're doing these things. There is no free lunch in the options market. Something has to have a cost. In this case, it's an opportunity cost, and that opportunity cost is probably poised to increase in the very near term. So bear that in mind, all of our listeners out there who do a lot of premium selling, a lot of open naked shorts and verticals and ratios and things like that tend to tie up a lot of excess margin on the old books. All right, thank you for that, Mr. Alex. Now we're going to keep on rolling right on into the strategy block.
The strategy block.
All right, and welcome to the strategy block. This is, of course, the portion of the show where Uncle Mike comes on down from the mountains of St. Charles, Illinois, to dispense some options wit, a little bit of options wisdom by the old fire. Of course, perhaps he could dispense with the fire today. It is somewhat warm here. Of course, a little bit cooler today than it has been of late, but the smoking jacket, perhaps no fire today. And Uncle Mike, it is a holiday week, so my birdies have been, shall we say, anticipating the long weekend. I'm not really getting my full bang for my buck out of them this week, but I've been hearing some whispers from them, something about a vertical or perhaps a diagonal spread. I couldn't hear if it was SPX or SPY. They were whispering both in my ear. Quite frankly, they were a little bit drunk, so I had to take what they were saying with a grain of salt. But be that as it may, are my birdies, did they earn their bird fee today, or are they pretty much just already out to lunch for the holiday weekend?
Well, yes and no. I mean, they're moonlighting for me, and I told them that if you ask them to do anything, just pretend that you're drunk. So they earned their bonus on my side.
There they go. Double agent birdies. I think I need to have a bird roast in my foreseeable future.
Oh, no. They're good birds. Leave them be. If you want a bird roast, we get hunting season coming up in November. We'll take you out to shoot some ducks or some geese somewhere. But anyway, but yes, the birdies were correct. There are some rumblings going on in the world of SPY. Just want to kind of give you an update as to a strategy that I've been doing for clients. This is kind of one of the core strategies with which I do. I've talked about it on the show a lot of times. Oversimplified version, let's say you had $100,000 that you wanted to put into the equity market. In lieu of putting the $100,000 into the equity market, we take $80,000 to $90,000, put into something that both the individual client and myself deem as safe or boring, so to speak, and then we put the remainder of money into an SPY diagonal spread. This works well if you have significant amounts of money outside of an IRA and then maybe a smaller IRA. You can get the growth portion of your portfolio concentrated into an IRA, and if the market does take a tumble, you have a very small portion of your exposure in the market because of the fact that all you have are these calls. Now, what I've been doing on the ride up, so to speak, between January 1st and May 22nd, I believe it was, when we made the all-time highs, the diagonal call spread that I've been doing on SPY, I've been rolling up the options. And I've been doing it as a way of protecting profits. So if an option gets too far in the money, what I'll do is I'll sell the call option for a profit because the market went up, and then buy another option at a higher strike price. So that way, if the market does tank, then once again, you have less risk on the table. So the most recent one that I did was I rolled up to the 166 call option, and this is on the long side of it, a little over a month ago. And keep in mind, I'm selling premium against these calls very frequently, and there's a whole other aspect to this trade. But when we went below 160 on SPY, I made the decision that I'm just getting out. I'm getting into cash. And so the specific option with which I was using was the SPY 166 call option. And the reason that I made my decision to go to cash, a variety of reasons, not that I'm an impending bear by any means, it's just that the reason that I got out was because the risk reward of, if I'm wrong, getting back in made sense. So for example, when we went below 160, I get out of that call option and I got out for, I believe it was $2.14 if memory serves. I got out, and so we're all in cash right now for this strategy with which we're doing. If the market stays the same or goes down, I'm a genius because of the fact that I am out. That's not what I'm looking at. What I'm looking at is, what is the pain going to be if I have to get back in on the way up? And it's my belief that the pain will not be as bad because of the fact that I've done this before. And what happens is that as the market goes higher, what I am banking on, so to speak, is a couple things. Number one, time decay. Time decay is going to happen in those SPY 166 September calls. So with that in mind, I have time on my side because I'm not fighting that battle anymore. I don't have to sell another call to neutralize theta or whatever the case may be. But the main reason with which I did this is because on the day that I got out, and I'd have to look this up, the VIX was significantly higher than what it is now. It's at 1637 right now. And that's just one indicator of volatility. It's not the specific call options volatility, but it's still a pretty good gauge. And so when I got out, because volatility was high, the price of that long call option wasn't near quite as bad as it was. Volatility held up the price, so to speak. So I got out of that option when SPY was probably in 159.80 or something along those lines, like right when it went below 160. And I got out for $2.14. Right now, I'm just looking at my screen. SPY is trading at 161.04. Or wait, I'm sorry, that's real time. Closed today, I believe, at 161.36. And the price of that same call option is at 225, and this is the closing price from what it looks like, 225 by 231. So I've missed out on $1.50 in movement of the of SPY, but on the option itself, I've missed out on 13 cents, it looks like. So, or I'm sorry, about 15 cents, just depending on where I would get filled. So with that in mind, I am totally cool with that and fine with that because of the fact that we haven't had that type of exposure. With that in mind, a couple other things to consider. You might say, well, Mike, you could have been selling premium against that. You could have been harvesting premium during that time. Well, yes and no. Yes, you could have if you sold the right strike, but the thing to look at is the fact that the market did go down a little bit further and then came up. I could have possibly gotten stopped out, and it could have eventually turned into a losing trade. Second point that I want to make from that, this is a bullish strategy in that we're trying to ultimately make money off of delta on this. We're just selling premium because we have to neutralize theta. If there was no theta or if there was no time decay in the long calls, I wouldn't even mess with selling the premium on it, as we all wouldn't. Third thing that I want to mention on this is you might say, well, Mike, aren't you missing the ride back from 161 to 166? Yeah, maybe I am, but what I want to emphasize is that we rode the train up to begin with, so if I miss the train back from 161 to 166, then I'm fine with it because we rode that same train back in May. So for now, I'm still planning on staying in cash in this strategy just because of the fact that we have that volatility benefit, so to speak, that theoretically volatility will go down if the market goes up. Now, no guarantees. The risk of this trade, which you always, always, always need to be aware of as a trader, is that it might not work out as you plan to. But what I am viewing on this trade is that if the market stays the same or goes down, I'm obviously right. Any idiot can figure that out. But how much pain am I going to feel if the market goes up? I feel that the pain that I would feel if the market goes up by missing those 45 points in SPX or whatever you want to calculate it to is worth it to just simply stay in cash for the time being. And that is one to grow on, folks.
There you go. The value of cash varies to each different person, but to Uncle Mike, it is clear and present. And thank you for that very interesting rundown there. Mr. Mike, you may now return my birdies to me, even though they're double agents, so I really don't know if I can trust them anymore. I might have to think about replacing them. Well, I don't know. Are cats as reliable? Maybe a dog. Maybe something else interesting. A ferret. Who knows? I'll see what
I'll
see. Hey, ferret. Good for ferreting out information.
You find a good ferret, yeah. I'd be interested.
Ferreting out some information. Maybe I'll swap it up for some ferrets. We'll see. But for now, it's time to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, our final segment of the old show. This is where we tell you what we're watching, what we're pairing into the old ether for, to keep an eye on in the coming weeks and months. And yes, it's that time of year again. I see it staring at me on the screen right now. Of course, Alcoa earnings are a week from today, the 8th, so that is traditionally the kickoff to old earnings season there. Of course, ticker symbol AA, and beyond Alcoa, there's just a slew of interesting stuff. I know a lot of options traders, this is really the time they really like to focus on. Of course, earnings time, because that's when you get a lot of fun juice, a lot of interesting activity in the names you may otherwise be watching that are kind of lackluster the other parts of the year. So I know this is an exciting time for all of us here on the show. Uncle Mike, obviously Apple, obviously maybe Ford and a few others. What else are you really keeping an eye on for the rest of this week as we start to gear up here for earnings season?
Well, I mean, I'm more focused on the non-farm that's coming out on Friday. I'm kind of curious to see what we have there for the most part. And then typically this is kind of a slower trading week. I'm just kind of surprised that we had the type of movement that we had today, considering what week we are in. So Tuesday and Wednesday are going to be very intriguing to me, and I'm going to be definitely watching the whole market with my finger on the trigger.
So I should mention to our listeners here, of course, it is the July 4th holiday in the States on the 4th, so we won't be recording a show this Thursday. So this is, unfortunately, your only fix for the week for the Odd Block program to all of our international listeners. I can only apologize. Hey, we only get a few holidays here in the States. We might as well take them when they come. But, of course, that means it is an abbreviated holiday week, so all of the warnings and caveats that we've issued on this show in the past for other holidays, of course, apply to this week. Thursday, the markets are closed. Friday is a half day. So essentially, you're looking at Wednesday being a lot of the decay coming out for the week going into the weekend, unless it probably won't be as bad this week as it has been in previous holidays, because as Mike alluded to, we have that odd scenario with non-farms coming out on that abbreviated day this week, so that tends to throw a wrench into the works. If it wasn't for that, we would see pretty much the bulk of the premium coming out by Wednesday on a lot of these trades. As it stands, with non-farms kind of lurking there in the wind, you might have a good chance of still being able to get into some premium trades going into late Wednesday, certainly, and perhaps even, depending on the results, a little bit on Friday morning. But it is an abbreviated day on Friday, no trading on Thursday, so I wouldn't be surprised if you see a lot of your names starting to leak some premium going into mid-session on Wednesday. So bear that in mind. Of course, I hate to see everyone running out there and just blasting out premium going into holiday weekends. That's not what we're saying at all. We're just saying be cognizant of that effect of theta and time decay on these kind of sporadic, shortened weeks, because you never really know what you're going to get. And of course, going into Wednesday and perhaps Friday morning, people are blasting away at premium. probably some interesting buying opportunities. You can get a free holiday weekend out of it, and some other interesting things. You get some free weekend risk. You don't have to worry about losing sleep over the weekend in case the market melts down, something happens in Europe or something happens overseas. You're protected. So I don't want all of our listeners to think they have to go out and blast out all their premium by Tuesday afternoon. That's not the case at all. Just be cognizant of the effect of these truncated weeks on theta. Mr. Alex, what are you watching for the rest of this week here?
I could not say it better than you and Mike. I just reiterate what you guys said, and I would, if volatility continues to come in, macro events, your point, world events, if they're going to be tanks in the street in Egypt in the next couple of days, Suez Canal closes, you can play this out a lot of different ways, especially in a thin week. But watching the 10-year, watching world macro events, if we have a good week this week and vol Tuesday, Wednesday comes in a little bit, I would buy a little insurance here. I would step back in and buy a little insurance, maybe some SPX puts, maybe some VIX calls, depending on how you look at things. But it's going to be a thin week. Friday, if we get surprising numbers, as Mike pointed out, we've got a number on Friday that a lot of people are going to focus on. I'd be very cautious this week. It's going to be thin. If I get a chance, I'd buy some premium here for this week.
Yeah, a good chance to load up with some downside puts or whatever your indications may lead you to. Of course, like I said, just be cognizant of all that juicy decay coming out earlier in the week, and who knows, might open up some opportunities to buy some protection and you could sleep well going into the long holiday weekend. And speaking of going into the long holiday weekends, that is going to do it for us here on the old program. To all of our listeners out there in the States, we want to wish you a happy holiday. To all of your listeners abroad, well, just enjoy some fireworks displays that you could see broadcast from the States on your online provider of choice. But before we go, let me check in with my cohorts here, my partners in crime, to see what they have cooking in their respective necks of the woods. Of course, the boys from the pit couldn't be here today. Andrew is on vacation yet again, and Mark is off in hither and yon, so I'll just give them a quick plug. Be sure to check out their boot camp series and everything else they have going on over there at optionpit.com, their gold course. A lot of great stuff they have cooking over there. Check it out if you're so inclined. Speaking of great things cooking, Uncle Mike, I know the webinar train's taken a week off. July 4th webinar probably wouldn't do too well. But what else do you have cooking over there in RCM for the coming weeks?
We got ratios, we got condors, we got butterflies for the 11th, 18th, and 25th. It's just going to be a plethora of strategies. It is a smorgasbord. This ain't no snack bar. This is all you can eat. Next week, we will be out with details.
I like it. I'm still waiting for the stupids. But other than that, I'm very excited.
Yes, sir.
And Alex, you said last week that you were one of the brave men going unto the breach with your July 3rd webinar. Is that still the case? And can our listeners still get their chance to get pretty much a one-on-one episode here, one-on-one webinar with the Viceroy?
Well, to Mike's sage wisdom of doing one on July 3rd and having one attendee, as of right now, I have one attendee. So Mike is spot on. Still going to do it noon on Wednesday. And if you do want to sign up, all the webinars, all the educational events are free here. Just come to optionsexpress.com. There is a webinar preceding me. There's an 11 a.m. that's going to talk about many of the new features, many of the new bells and whistles, and the walk limit product, which I've talked about a bit. Walk limit is going to get the timer hopefully in the next 2 weeks. I showcase that on the Hub webinar as well. But right now it's a cozy one-on-one on Wednesday. If somebody else wants to sign up, we can do a 2-on-1, and I can personalize the output. But other than that, holiday week, it's Sebastian's birthday this week, so I think it's very fitting that we're closing the country down on Thursday to celebrate on his behalf, and everybody should have a safe holiday weekend.
Listeners, you heard it from the man himself. You are crazy, stupid even, if you don't take your chance to surf on in and register for essentially, I was joking, but it is going to be almost a one-on-one with Alex. You can get a personalized webinar.
It might be the same guy I talked to 10 years ago.
He's hardcore. He's a July 3rd webinar man. But listeners, you are quite foolish if you don't take advantage of that opportunity. A one-on-one or even a one-on-5 or whatever the case may be with Alex is a rare opportunity. Take it. If you don't, you are truly missing out. So you can squeeze a few minutes in there on July 3rd. The fireworks aren't going off till the afternoon anyway, so you got plenty of time to surf on over to optionsexpress.com, register for Alex's webinar, and enjoy all that fun one-on-one or perhaps one-on-3 interaction you're going to get. And on behalf of Alex and Uncle Mike and the boys over at the Pit, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this show and making it such a banner success. And have a great holiday week, and we'll see you next week right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.